All right, welcome back for the episode of Carnivore Trades. Today is Wednesday, May 17th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, markets just closed here, and we have a rally on our hands. So spiders are up 1.2 and Q's up exactly the same there, just 1.21. Dow up 1.3 and the Russell, big winner on the day, up 2.29. A lot of that coming on the back of the KRE. If you remember back to Monday, I said, KRE got a pretty good bid, and I think a lot of that may be put decaying here. So a lot of hedges being bought as regionals weak. And we haven't really, the sector's been quiet news-wise. And if that's the case, then those puts are going to decay, and you get a bid towards OPEX. So that obviously helping out the Russell 2000 has had a nice day, and markets in general just bidding up. Zero TT call buying frenzy took place around 12:30. The reasoning was the debt ceiling. So Biden's going to take some, I guess he canceled some trips, and they're going to try and get it done this weekend. It looks like, to me, it just seems like it's really just an excuse to, it's an excuse for the institution to push the market around. If that's the narrative, right, that we're selling or that we're trading up, it's like they're making it out as if we were crashing the last 3 weeks because of the debt ceiling, but that's sideways. So just a little, to me, it's just an excuse to do what the market wanted to do anyway. But either way, market getting a nice bid here, but we are coming into some pretty important levels, specifically in tech. Now, for the spiders here, it's different because we have a lot of, the dynamics are different on all these charts right now. The spiders, we have a big broadening pattern here, and then we have this kind of inside bar. We've talked about the possibility for one more pop here. I didn't think we would have much gas in the tank here. I thought it was taking too long to play out, but we did get a pop today, so we got to respect that. Where can this go? I would say probably into the 418 area. So right in that zone, and that's on the spiders here. Every chart's a little bit different here, and basically just a measured move below to this pivot here, and you just add that. If you follow the futures, it's going to take you right to about 42.10. Right, a slight nominal high is where that would go. That doesn't have to play out here. It is OPEX week. I've found out many times in the past when you're up big, first 2 to 3 days of OPEX week, a lot of the time Thursday, Wednesday, late Wednesday, or Thursday, Friday, they pull the rug here. So that's something we got to watch for, specifically on tech. But that is a possibility, for the spiders to get up into that area. And then again, we do have that gap fill really close. And again, we have that broadening pattern there. So a lot of resistance that we're coming into, but the Qs are a little different. So the Qs, again, we've been following this rising wedge here. Like it. I like this little pop that we get above that. Usually when you get a rising wedge, the best ones are when you get a pop above it and a fake out. And the same thing with a falling wedge on the downside. Why do I think it's going to be a fake out? Well, you're just going into a lot of resistance. Filled this gap. We filled this gap here today, and then there's another one here at 332.20, not that far away. But additionally, I pointed this out yesterday, but you look at the fib retrace here, you're going into, and we just tagged a 50% fib retrace going back to an all-time high, the October lows, and you're going into a double top. Need to say there's a lot here. Look at all the chop right here, right? So a lot of bags in there, lots of volume, right? On declining volume on the Qs. So we're going into a lot of resistance. We've talked about kind of the RSI MACD divergence as well. RSI MACD divergence there. So again, I think there's much less upside in tech. Maybe there's a little bit more upside in the spiders, but right now, to me, and another thing too, if we're rallying up on the debt ceiling, then what's going to happen when they actually pass it? That set us up for a sell the news potentially. But right now, so that's really what I'm seeing here on the Qs. Another thing too, I don't point out the NQ all that often, but the NQ is a little bit different than triple Qs, but that rising wedge is still perfectly intact. So we'll see what that does here. Again, you're kind of getting close to these areas here. Same areas obviously on the Qs, but that one has not been really violated. But basically the same pattern on both sides. And then if we go over to the Dow here, that had a really weak session yesterday. Got a nice pop today, up 1.3. A little bit of a bid here. There's a gap right in this area. I think the Dow is pretty sloppy here. I'm not in love with the pattern here. I don't like how you're so far off the highs here compared to, the SPY and the Qs. So I'm not as much of a fan of the Dow here either. But it got a pop and it held 331. Loses, probably going to go The Russell, obviously, we talked about that, getting a nice bid. I don't see this going much through 180, and that's, I mean, that's, God willing, we get up there, right? So lots of resistance in this area. Weekly pattern is weak, monthly pattern is weak. It's getting a nice bid. We'll respect it here. And if the KRE remains strong, that's probably going to be a tailwind for the IWM, but it's different. So these four major indices are definitely all kind of different right now, and you got to respect each and every one of them based on the pattern right now. Also, we got to be careful because we are going to OPEX week, and today is expiration. So VIX rolling over to the new contract, and we should get a gap up in VIX tomorrow. We've had big moves before the day after, and really the following days after expiration. In fact, last month, in here we got that little pump, and then we got that slight nominal low, and then we got that huge bid, 16, 15 and change up to 21 and change in really just 2-3 days. There is a window of risk here as that kind of those volatility hedges are no longer on the table here. Again, those zombie dip buyers that just buy every bad news story, they're kind of like leaving this market here. But today we got a pump, so we'll respect it. Either way, a couple of things that is interesting here, and another thing too, the VIX did kind of hold up a little bit, came off the. Just keep an eye on that. If we continue pumping and the VIX is pushing higher, that's a huge red flag. But outside of that, one thing that catches my eye, and we'll just flip over to TradingView here, is the dollar index. This held up really well all day long. It did come a little bit off the highs, but you confirm now above that 50 moving average on the daily. The weekly still has a little bit of work to do, but just the fact that the dollar index was green today, and then going back to, and this is in a day where we had a huge rally, right? Dollar green, and the 2-year got hit, and this is in danger here. Like if you lose this pivot, that's that's going to be very negative for the market. What's going on right now is the market, a lot of market participants are, it's not going to happen, but there's some market participants that think that the Fed's going to cut rates, and they think the Fed's going to cut rates every month for the rest of the year. They think, that's not going to happen. This will ultimately poke a hole in that theory, and that's where the market's going to get the, the rug pull. I don't think we're at quite in this situation. We're not quite there yet. That's more of like a down the line thing. But to me, what I'm kind of saying all that to say is the dollar is telling us that there's still trouble out there, and that rates aren't going to continue to go. And like again, the debt ceiling. If they raise the debt ceiling, what does that mean? More spending. What's more spending? More inflation. What does that mean? The Fed's got more work to do. So just some things here to watch behind the scenes. In the short term, the market can do what it wants, but definitely things we need to pay attention to. Anyways, we covered the indices. Let's get over to the semis. That got a nice bid here today, up 2.7. I think it probably backs off this trend line here again. Up big, excuse me. Monday and then flat yesterday and then up today, but up big this week. Usually you're going to give some of that back for an OPEX Friday. Also, trend line's pretty good resistance. Also kind of going into the breakdown area, but big reason why it was up. TSM had a nice pop up 6% today. I think they did there was some news. They did some deal with Japan. I'm not sure details of it, but it did gap up. To me, I'll get bullish on this when Buffett buys back in. He didn't sell it for no reason. But semiconductors getting a bid. Again, we'll continue to respect that here. Cloud software also getting a nice bid. That looks to have just made a slight high. And we talked about that. Maybe that can get to the 310 area and fill that gap there. There should be pretty good resistance area, but you had a nice little pullback pattern, so got a nice pop off there. But that's where we're going to be looking for the IGV to go. And then if you get through that, there is a gap fill here. I'm not really sure it can get up there. And I think the Qs are really kind of running on fumes here. But anyways, Dow Transports here, that had a nice day, up 2%. Again, getting a pop off that trend line here. Still not a great looking pattern here. Really, really down move, kind of languishing here. Range is also getting pretty tight on this. We'll see. It's still below the moving averages, but it got a nice bid today. Give it the benefit of the doubt for now. Trend line is holding. We'll see how it reacts if we go and hit this trend line one more time, get rejected. If that happens, trend line can hold. I've already hit it 1, 2, 3, 4 times now. Anyways, all right, we talked about bonds here a little bit, but there's the 2-year again. Watch that area. The 10-year yield Again, kind of hammering on 3.58 area. So zone and kind of bubbling up underneath it. The 30-year here is also problematic here. This is starting to bubble up as well. And if we look at the TLT, down again today. And again, here's another reason why I just don't see that much upside right now in tech without some type of a correction. QQQ been diverging from TLT. You know, those jaws got a snapshot. So anyways, housing here, XHP hanging in there. Okay, up 1.6. That's still holding the moving averages against ITB there. Still really strong. The NQ, again, this thing just does not want to, every time it tries to break out, it comes back in. Every time it tries down, it comes back up. I still just don't love the pattern. Nothing good to do with it here. XLF, again, got a bid with financials. You know, you have higher lows here, so we'll respect that for the time being. Got a slight close above the 50 and average. Weekly pattern is no good, though. I do not like this moving. You know, nothing to say it can't hold up a little. We talked about KRE, that got a bid. Finally getting above that 20 moving average, but that's been resistance really since the crash. So we'll see how that behaves tomorrow. Again, I can't rule out another little bit. Again, puts decaying. That does. This $40 level should be pretty good resistance, 40 to 41. Anybody who tried to buy this sell-off is underwater here, so they're going to turn into sellers there most likely, but we'll see how it reacts going into the end of the week. KBE, same thing. I would say that level is probably, you know, 35, 75, 36, somewhere in that area there for resistance. And XPD, we've been talking about this possible ABC up, and that's what we're getting here. This can still go to 445 to 450. Problem. I just don't like it on the big. All right, crude shaping up much better here today, so that was up 2.6, still below the moving averages though. That's what I don't like about it. But you do have, you know, possible higher lows here. If you take this pivot out, it's going 76. That's really all the upside I've got for it right now, but it did have a nice bounce today. But, you know, again, if that, you know, if you back off that 20 MA, it can turn south. So just be aware of that. But it got a nice bounce today, and it does have potential higher setup here. XLE, really just an inside day, and look where it stalled out, right? High of the day, 78.88, and where's that trend line? Doesn't look that close. Intraday, but basically, you know, a few pennies off of that trend line. You can. So we'll see if I can get back above that. Maybe you can go test the 20 one more time. But, I think this needs to go into correction mode. XOP, same thing. I don't like that pattern on the daily or weekly. And same thing with OIH. I think consolidating. Nat gas inside day here. No real problems. Again, seems like nat gas really likes Mondays and Fridays. So Monday up, 1, 2, 3 pullback, pop on Friday. Monday up, 1, 2, 3 back. Maybe Friday. We'll see. There's obviously a seller at 250 there. If you get through that, this can quickly. We already touched on the dollar index that did get above the 50 M. Again, need the bigger level. Average, you get a weekly of that. And the gold here, continuing to pull back a little bit. That's it's trying to hang on to that 50 MA here. Just below it right now. I think it's probably got to go test 950, 950 to 960, maybe even that 100 MA. But you know, it hasn't really gone anywhere in weeks. It does look a little tired. I've been talking about it in there, and looking like that is starting to be the case here. Silver also, you know, we talked about this yesterday. You wanted to see that. You wanted to see a big bounce off the 50 MA if you're bullish, and that kind of reverse today really just says that probably is going to grind here, build a base, and down. But overall, you know, it's, you know, we were talking about 2350 for a while, and you know, it's basically 20-week moving average. Maybe we get there by, you know, we could even get there by Friday. Again, OPEX, they usually like slam the precious metals. It's been a thing for a while here, so we'll see if that continues. But again, that level should get tagged. Platinum here also just kind of hanging sideways. I like the bigger time frames, as you guys know. Just needs to consolidate more. Same thing with palladium. I'd like to see a pattern develop there. I do like that on the bigger time frame. Copper finally getting defended here, so nice pop. Finishing at 375 today. So nice little bid there. Again, this is nothing crazy though. If this goes sideways enough, it'll go lower. I would say right now, I know I talked about 360 yesterday. I would be careful about picking it up long here based on what you just did today. I prefer you to be oversold as you're going into a level And if you get a big bounce like that, especially with good volume, you're not going to be as sold quickly when you get down there. So maybe for a day trading level, but that's about it. So I don't really like this. I think if it sideways, it's bad looking. Probably going to want to down into 342, 3. It's holding up for dollar Bitcoin here. That got a nice bid along with the market. That was really weak this morning. If you look on the intradays here, 15 minutes, getting popped at 10:30, all the way down here at 20,000, 26,600. And then we got a nice bid, and then right in the middle of the day when everything started to blow up, it floated up with everything else. Well, watch this trend line here. If you get a daily close above that, which is at 8 p.m. tonight, that negates the pattern here. So that's pretty much it. Well, that doesn't mean it can't still go lower. It just means that that pattern is. This can still get one more pop here. Again, the weekly time frame isn't really that damaged. In fact, it's really not damaged at all. So I can't really say, I can't really rule anything like that out. But for right now, that's kind of the biggest level we're watching here in the short term Bitcoin. Anyways, again, for the spiders here, so again, take every chart here to its own merit right now. So I think the spiders can possibly get up into 418. That would be a slight nominal high. In fact, maybe that's what we need in order to get kind of the bears out of this market. If you get those bears underwater, that anybody who shorted in February, that could be enough to get them out so that you can finally get a real sell. It's certainly possible. I just think right now for the Qs specifically, I think the upside is much more limited. So, and then you have the Russell here again, a lot 180, and then the Dow. I wouldn't do anything with this. It's price cap weighted, but those are the levels we're watching there on the SPY and the Q. And we'll see what we get going into tomorrow. Remember, it is OPEX week, so expect lots of whipsaw and lots more rumors moving forward. Anyways, guys, gonna wrap up here. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.